Welcome back to Fundamentals Unfiltered. In this week's In the News, Amazon has now overtaken Walmart as the largest company in the world. And we're going to be discussing why it's taken over 20 years, almost 20 years, for me to be right on something.
Sounds like a whopper.
Louis, the Fortune Global 500 came out. And one of the many business publications I get, and it's always like Christmas morning. Amazon, which we're old enough to remember as the scrappy little online book reseller, has now become the largest company in the world. It's overtaken Walmart, over 700 billion in sales, and given its growth rate, Amazon is very likely in the next few years to become the first trillion-dollar company, $1 trillion in sales. Plenty of companies, quite a few companies have north of $1 trillion in market cap, but it's going to very likely become the first $1 trillion plus company in sales. Now, can you remember back when you first started using Amazon? I mean, did you jump on this? Were you an early adopter, as they call it, and you started shopping online in the early 90s, or did that come later for you?
It definitely came later for me. The bookseller part was not the biggest attraction.
That's the interesting thing is, we were talking about the death of malls and our deep dive, and I guess I contributed to it because you know what? I think I got on Amazon pretty soon. I wasn't always kind of a book lover, a bibliophile, but as you know, I own thousands of books, and I'd say the majority of them were bought on Amazon. And as much as I love going to Barnes and Noble and Books A Million, and you remember Walden Books, which was the smaller retailer, mall-based retailer. When I would just go on Amazon for hours. I don't do it as much anymore. I don't buy as many books because I don't have much room, but I would just go on there for hours and make that wish list. And the thing is, you found books that they didn't have at these physical retailers. Older books that were some of which may have even been out of print. Eventually they started using the third party retailers. But the interesting thing is, how do you imagine Amazon going from this book retailer to this diversified online retailer? But a lot of people don't understand their big profit driver is Amazon Web Services, AWS. That is what drives their profits. I mean, retail profits are good, but they're thin.
Yeah.
They pass those cost savings mostly to the consumer. And of course, there's in this Fortune article, there's an interview with Jeff Bezos, which you kind of look like Jeff Bezos now that I see.
Well, anyway, my pocketbook does not look, or my wallet.
Yeah, few people do. But Jeff Bezos, even he makes the point that you really could not have envisioned anything from back then becoming what it did in so many changes. And we all knew the internet was going to change everything.
Yeah.
But I don't think we understood just exactly what that would pick up on. And AWS is interesting because I did for one of the new courses that I'm developing, I did a case study on Netflix, and I was diving into Netflix quite a bit, and they use AWS, the cloud services for their platform. And it's really the one thing that, is a little bit of a risk to Netflix in terms of suppliers having some bargaining power. But AWS is really their driver. And as Jeff Bezos talks about, he's no longer CEO, he's still executive chairman. But their management team they are all in on AI, like a lot of tech companies. They're spending, they've committed hundreds of billions of dollars to AI infrastructure spending. So they're still projecting quite a bit of growth. And I was looking at the stock this morning, just quickly. It's only trading at 21 times or so trailing earnings. And that's not a recommendation, but I got to tell you, that made me perk up a little bit after reading this article. So I might be taking a look at Amazon. But you know, can you imagine going back even when you started using Amazon? I mean, could you imagine it becoming like did you think, oh, they're
No.
gonna eat Walmart's lunch and
So there's a couple things, right? We could talk about it, but I've seen old clips and stuff like Jeff Bezos talk about. They were actually, their model was to actually lose money for the first
right,
years. People don't understand that business model. I definitely don't. And it kind of shocked me listening to that. We could go into more details on that. Um, I'm again. We had the episode of the mall. I'm one of those people who I like to go touch, physically touch. So
right,
it's very hard for me to use that Amazon, but it's become so easy.
right.
Um, you know,
You order something, it gets here in
it
a couple
gets,
of hours,
yeah,
and it's how did they do that?
yeah, and things you don't have in your local
Right.
marketplace. So that's the thing that has just has made them grow, gave them a household name. You look at even with your Amazon Prime subscription, what you get. You not only get the 1 to 2 day shipping, you also get all the video.
Their streaming service,
Yeah,
yeah,
which
and
is just
I'd say
amazing.
behind Netflix, they're probably the top streaming service behind Netflix. Yeah, that's a good point. I didn't even bring up because I was just mentioning the retail and AWS, but you're right. Prime's become a whole separate profit driver for them,
Yeah, and
and
and a lot of the hot shows right now are on Paramount Plus, which is part of your Prime service. So
oh, you get Paramount Plus? Oh,
yeah,
I didn't know that.
yeah. So it saves you on doing that.
Well,
So
and I should mention too, they invested in a lot of original content, just like
mhm.
Netflix did with Stranger Things and all their shows. Amazon's, started, and wasn't it a what's the Eddie Murphy movie that we used to love? Coming
Coming
to
to
America,
America,
but Coming
yeah,
to America too. That
yep,
was an Amazon
yeah,
production.
yep,
So they're investing in their own original content, which is
yeah,
interesting. So, and these three very very profitable businesses, and like I said, they will very likely become the first $1 trillion plus company in sales, and that is very interesting. Yeah, getting back to the economics of their retail, I will say people like me who were schooled in the Benjamin Graham, Warren Buffett School of Investing, one of the things we did not pick up on, not just me, I say we because there's a lot of us, we didn't pick up on when you look at companies like Amazon. Normally, when we think about a company making investments into their future, we don't think about the profit and loss statement. We think about the profit and loss statement and we say, okay, all of the expenses are just matched to revenue. They're not really investments in the future. The investments in the future are additions to the balance sheet. So they show up on the cash flow statement as capital expenditures. This is the part of the show where I geek out on you, Louis.
that's okay.
But
I enjoy it.
what we miss with a lot of these tech companies and companies like Amazon, a big part of their marketing spend and a big part of their research and development spend were investments in their future. So what we needed to do is in understanding their profitability, we needed to move some portion of their marketing and their R&D spend down off the profit and loss statement. So we didn't, in other words, we didn't really understand their profitability until they were a much bigger company. And I'm not saying there wasn't value later. I some of us really wish we figured that out in late 2010,
Yeah,
2011.
yeah, yeah, yeah.
But I learned as did a lot of other people.
To bring a couple other things into this, I without naming names, I do have a relative that works for AWS, and I know a big
Oh, okay.
project that they are working on is some of their infrastructure um, to become net zero to actually start um, bringing in energy to sell it back to municipalities.
Oh, okay.
So they're looking at that, how they can reduce their energy intake, and also create, if you will, um, substations that could give back to your communities and things
That
like
could
that.
tie in their AI initiatives too,
Yeah,
because of course this is probably one of the big bottlenecks that we're going to reach in the next couple of years. Is just the energy needs of
yeah,
powering these AI data centers. So that
absolutely.
probably makes sense. A lot of these companies are making those
Yeah.
investments.
And another thing, I don't know if you have ever used Amazon Grocery.
No, I've done the Whole Foods, but
Yeah,
I've never done
so
Amazon Grocery.
so Amazon Grocery is different than Whole Foods
Hmm.
in the sense of it's like an Amazon delivery, but you could get it the same day.
Wow.
Yeah, and it's crazy. I don't think it's rolled out in all the areas. So I mean, your local grocery stores are gonna be competing with Amazon
Yeah.
right now, which is just a crazy thing to think about.
Yeah, I think some point I want to do a deep dive on the internet and all the basically the view that we all had in the late 90s, early 2000s.
Okay. Yeah.
Now, something that we're going to be talking on, I'm gonna touch on it here, but this is going to dominate the news for a while, and that is both Anthropic and OpenAI are
Yep.
planning to go public. So they're currently private companies, and for those who don't know, when you hear about OpenAI having a certain valuation
Hmm.
or Anthropic having a certain valuation, what that means is when they raise money from private institutions, they sell off a portion of that business. Basically, that amount just scales up.
Hmm.
So, for example, if you sold off 5% of your business, whatever you sold that 5% for, you can value the entire company by just multiplying by 20,
Yeah.
because so that's what they mean. So, right now, you have these private valuations. A lot of people are saying with Anthropic, especially that first, Anthropic's likely going to go first. They've already filed some preliminary stuff with the SEC. They're in what's called a quiet period. So we don't have a prospectus yet. That'll come out at some point, and then I'll read through it and we can talk about it. But there are a lot of people thinking that it's going to be a $2 trillion plus IPO. So this is even going to be bigger than the SpaceX IPO, which we just saw. OpenAI, Anthropic, from what we can gather, and again, these are private companies, but Anthropic is growing like crazy. What we don't know is how profitable these companies are going to
Yeah.
be in the future. So I'm still very much a picks and shovels kind of guy in terms of the way that I view AI. But it's something that we're going to pay attention to. Now, what I said when I was talking, when I did the introduction, and I was saying it's taken me 20 years to be right. I'm a nervous guy, Louis. You've known
Okay.
me. You know me
Yeah.
for a
Yeah.
long time. I'm not a cool cat like you. I'm nervous, and one of the things that I've been really nervous about, one of the things a lot of people in credit markets have worried about for a long time, is at what point do credit markets, what point do treasury markets stop being so accommodative to fiscal deficits, right?
Okay. Yep.
So right now, our national debt has exceeded gross domestic product. So
Hmm.
our national debt's larger than the economy. It is growing. Neither party wants to do anything about fiscal deficits. Neither party talks about it. The when the U.S. Treasury bonds were downgraded by the three major credit agencies, that's Standard and Poor's, Moody's, and Fitch. All three credit agencies didn't so much cite the magnitude of the debt. They cited the political dysfunction, as you will, or the political unwillingness to do anything about it.
Hmm.
And if you go back to the mid 90s, one of the reasons why you started to actually have some action in terms of balancing the budget was that the bond markets were reacting and bond yields became very high. So there was this belief that if you really tackled the budget, and I think Bill Clinton deserves a lot of credit because he I think showed a lot of leadership. I think a lot of people in the Republican Party showed leadership, but there was actually some action on this, and we did balance the budget in 2000. We had a surplus, but it was really because of the bond market. In other words, the bond market forced the hands of the politicians. So when people say, well, why haven't politicians acted? Because they didn't have to. The bond market was just absorbing. So last week, the U.S. Treasury did a 30-year Treasury auction at the highest yield since 2001. So the yields went as high as 5.22%. This goes back to something I talked about in our last week's show. I said the Fed does not have direct control over medium and long-term bond rates. So what does this mean? Well, this could mean higher interest rates for everybody else. If the government borrows at a higher rate, guess what? I don't care who you are, you're not as creditworthy as the government. You're going to pay higher rates. And this morning, I didn't get a chance to dive into this too much, but it looks like the Treasury is actually trying to bend that curve a little bit. They're issuing short-term debt and buying long-term debt, and they're trying to bring down long-term bond rates. But that's all a Band-Aid. So what the market is responding to is there's too much government debt, and at some point they're going to demand a premium. Even the United States, which has the world's reserve currency, bond market's going to demand a premium for lending to the United States, and we're starting to see that. Maybe this goes away. I don't know. Bond markets have shocked the heck out of me for the last 15 to 20 years. But that's interesting, and something, it amazes me how few people talk about this. But
yeah, and I think our newest administration was brought in to and has told us the things that they were doing was to get the government spending under control. But it seems that and maybe I'm wrong by saying
I don't
that.
think that was ever a top mandate for them. I don't think their voting constituency, because the reality is, if you're really going to make a dent in government spending, you have to go after long-term entitlements. There is no other way around it. And that was always the false promise of politicians, and thinking that, my feeling on this, that politicians always promise the proverbial free lunch. But there is no way to do it without tackling long-term entitlements. And this administration, as much as any other, they know it's political suicide to do that. And that's the problem. Ultimately, it's not going to be the politicians. It's going to be the voters who are going to have to react, or they're going to have to react to this in some capacity or another. So I want to move on to something that is very near and dear to my heart, Louis. Do you remember a couple of years ago, Popeyes had a chicken sandwich that, as the kids would say, it went viral. Do you remember that?
Unfortunately, I do.
Yeah, they called them the Chicken Wars, and they were having the chicken sandwich wars. And that's kind of died down, but I'm trying to think of this person's name. So,
funny fact is McDonald's is known more for its chicken than it is for its hamburgers.
That's blasphemy, Louis.
I know, it's crazy. It's crazy. Obviously, they have. There's a lot we can dive really deep into that, but go ahead, Matt. I cut you off.
You're in the burger business, but
Yep.
So the news is not about Popeye's chicken sandwich. The news is that Burger King has now overtaken Wendy's as the second largest, in terms of sales, the second largest burger chain in the United States, behind McDonald's. And one of the reasons why is that they hired Chef Amy Alarcon. I don't know if I'm pronouncing that right. And Chef Amy is the person who developed that Popeye's chicken sandwich that went viral back. It's been 2019.
Yeah.
So anyway, Burger King redeveloped or reinvigorated the Whopper. And I may have or may not have had one yesterday after I read this article.
Okay.
And by may or may not, I mean I absolutely did have a Whopper
yesterday.
So a couple of things. Number one, I don't like mayo on my hamburger.
Okay.
That's number one. But
Okay.
apparently they have better mayonnaise than they had before. I couldn't tell you because I didn't
Okay.
have it. But what they did do is they used a better bun, so it's no
Okay.
longer it's a more, kind of a gourmet bun. It holds its shape, and they put the burger now. They don't wrap it in the way that they used to. They put the burger in
A
in
box.
a cardboard box so
Okay.
it maintains its shape. It was delicious,
Okay.
but it has helped to reinvigorate Burger King's domestic sales. And I don't know. What are your thoughts as a burger entrepreneur? Have you had the new Whopper yet?
I have not actually preparing for the show, and this being brought up to me has sparked my interest to see what I definitely usually am on my burger game or fast food game. As you can tell by my figure, um,
Happens are the best of us,
yeah,
Louis.
I've spent many more hours in the fast food restaurant than the gym, but that's okay. Um, but I've done a lot of research on. Now I do have more of a gourmet style burger.
Right. It's not a fast
It's
food
not a
burger.
fast food,
It's a premium offering, but
but I also the fast food, because there's so many of them, because it's kind of the same thing. I have done a lot of studies. We always do get compared to a fast food place. So I'm very curious. I'm not so I, the Wendy's. I've seen the recently. I've definitely seen the downfall of Wendy's. Um,
yeah. Now that's another thing that's in the news now is there's an investor named Nelson Peltz who's kind of a shareholder activist, sometimes private equity investor. He's trying to get a consortium to take Wendy's private, and he thinks he has a plan to reinvigorate those stores.
okay.
Yeah, you're right. The Wendy's by us, it's not a
Yeah.
very good experience. And frankly, one of the things that Burger King, Wendy's they don't have the kiosks.
Yeah.
I know there are a lot of older people don't like the kiosks.
Hmm.
You go into McDonald's and they get mad,
Hmm.
but the kiosks are very convenient. So there's a pretty obvious place where Wendy's and Burger King can up their game and make their offerings more
Yeah,
convenient.
there's definitely a lot of a lot of changes that could be made. I know looking at Wendy's, they've had a pretty big. If you ever look at their social media, whenever they put out something and somebody puts comments, they have very witty comebacks. They're
Oh, really?
very strong. I would say, again, who am I? But I would say to them, start worrying about your food more than the online. The quality. Burger King, I've always liked Burger King. It was that flame
Yes.
broiled burger. It seemed to be better. Even me, I would, between those three, if you will, McDonald's, Burger King, and Wendy's,
Yeah.
I like Burger King better. I'm a poppy or a sesame seed guy. I
Yes.
love the
You're gonna
sesame
like their
seed.
new bun because
Okay.
it's still a sesame seed bun, but
Yeah.
it's a better bun.
Okay.
No, I agree with you, except for breakfast.
Oh yeah, yeah, yeah,
Breakfast,
yeah.
I gotta give McDonald's
I'm
breakfast.
talking about your staple.
Yes,
Your staples. Yeah, yeah.
I'm with you. As far as the burger wars, I like a good Whopper.
Yeah,
Yeah.
yeah. See, and then you throw in Chick-fil-A.
I love Chick-fil-A, but it is always so busy, and there's just a point where I say it's not worth it.
Yeah,
You know.
yeah. I just, but again, there's nothing different from a Chick-fil-A sandwich than a McDonald's, Wendy's. It's the atmosphere and how they make you feel.
Yeah.
Man, we could talk about this for hours.
Yes,
And
we can. And Louis, we will be talking more about fast food in the future. Thanks everyone for watching today's In the News segment. It was brought to you by the Fundamental Investing Foundations course by the Fundamental Investing Institute. If you want to keep learning, visit fiilearn.com. Don't forget to subscribe and share, comment, and any questions we can help answer them. We will be happy to do so. See everyone next time.
See you next time.